Good morning, my friends. Happy Monday. I had to think about that like I didn't know it was Monday. Happy Monday. So as everyone's getting on, let me know you're here. Say hi in the comments. Tell me where you're saying hi from. I'm doing a workshop, not next week, but the week after, for anyone who self-prepares their tax return. So if there's any of you, there's not a lot of you in here. That's why I'm not really targeting to y'all. But if you happen to be watching this and you do self-prepare your tax return, you might want to get more information on the workshop that's coming up in a few weeks. And so I did a lot of work on that, and it was a good weekend. All right, why don't we jump on in? Today we are talking about startup costs. So I can't tell you how many clients or potential clients I get who ask some version of this question. It's, I didn't make money last year, but I spent a lot of money. Or, I wasn't in business yet, but I spent a lot of money getting my business ready, right? So whatever it is, the point at startup costs, what we're talking about is, and they're just concerned that they put all this money out. They spent this money into their business, but because they didn't make any money or they weren't actually ready to make money, their question is, do I get to take that expense, right? And the answer is, heck, yes, you do. Good morning, Danielle. Yes, absolutely. Any money you spend in your business, even if it's during setup or startup, before you're able to actually make any money, you can expense those costs. There are certain rules to it though, so we're going to talk about that. Let's start with assuming you are actually spending all this money with the intent of eventually launching a profit-making business. Then yes, you can deduct those expenses before you even make a penny. Okay, we call them startup costs. And the reason I put that in there, you guys, because a lot of times people, they kind of dabble in things, right? They're like, oh, well, you know what? They'll think about doing something. They're like, I like doing that. And it's more of a hobby. And they never actually get to the point where they're like, you know what? I can make money off this. All right, well, that's not a business. That's a hobby. And those expenses aren't going to be deductible as business expenses. All right. The point is you have to have the intent of eventually making a profit. All right. It doesn't have to be, it might take you a year to get to the point where you can start making money. All right. But if you're spending this money with like, one day I'm going to sell a product, or I'm getting all this ready because I'm going to create a product, sell a product, provide a service, then those are startup costs. And the reason I want to get into this, because a lot of times, you guys, that startup phase is a lot longer than we think it is. For some, it's, I want to start a business, boom, they get it started up, and within a month, they're making money, right? Or they're selling product, or they're selling a service. Others, they might decide, it might take them a year or more to actually get to the point where they're ready to market and make a product or a service or something to sell. All right. They might have to maybe they do some education. Maybe they have to take some courses to get educated in what it is they want to learn or provide, right? So maybe they take 6 months, 9 months, a year of, trainings and classes and going to conferences and getting all prepared. And then, a year later, they're like, okay, I am ready. I'm ready to put my product or service out into the world and start making some moolah. Just because it took all that time, it doesn't mean that all those expenses that you incurred before you were ready to make money are lost, okay? They're not. And they're called startup costs, and that's what we're going to talk about today. So again, a startup cost are all the expenses and the costs that you incur before you quote unquote open up to make money. Once you so it's the time when you're not actually making money. You're not ready to start providing a product or service. All right. So let's talk about some of those costs associated with starting up a business and setting up a business that we would qualify as startup costs. All right. So before you even start, again, before you launch that product or service out into the world for people to start consuming, you might have to hire an accountant, right? You might need some help setting up your tax entity or your business entity. You might talk to an accountant about how to set up your entity. You might talk to a bookkeeper and get software in place and, figure out what the best software is. You might use a bookkeeper. You might just start getting a bookkeeper early because you don't want to do it, whatever the reason. Okay. But it's very likely that you incur some accountant or bookkeeping fees before you even launch your business. Same goes for legal fees, right? You might have to, you have articles of incorporation or organizational documents. You might have a partnership. So you need to discuss the partnership agreement. You have to create it, right? I'm not going to create that as a business owner. I'm going to hire a lawyer to do that. All right. You might be buying a business. Maybe you're a franchisee and you're buying a franchise. You're going to have those legal fees and those franchise fees that you're incurring before you even start business. All right. A lot of registration activities. You have to register your business with the Secretary of State. Maybe you are a CPA and you have to register your business with the board, with the accounting board. All those registration fees that you incur before you're ready to launch your product or service are going to be startup costs. You might set up your advertising, right? Even though you don't have a product or service to provide yet, you might start your advertising before then. Okay, so any advertising that you set up, you pay for, you get going before you're ready to sell, startup cost. Promotional activities, same thing. Maybe you're a gym, you're not ready for business yet, but you have an open house a month before you're ready to open and start selling memberships, right? So maybe you have an open house. It's a promotional activity. All right. So you get in there and all those expenses for throwing that open house can be a startup cost. Employee training. Just because you're not in business, maybe you hire employees early so you can train them, right? So that when you are ready to open, you're not training them on the job, right? So your employees, again, your product or service or your place of business not open yet to make money, but you have employees that you're training and you're hiring and getting ready for that opening. Logo design is another one. Logo design, branding, any of that. You might have rent, and kind of goes back to payroll before the launch of the biz, right? You may have a rental space that you are getting ready for your opening. Equipment, any of the equipment you got to buy, little, big or small. And finally, inventory. So all of these things are the non-recurring costs that are associated with setting up a business. All right. Again, you guys, if you're jumping in here, let me know. If you're watching it on replay, put in your questions or your comments or your maybe your expense categories that you're not sure about. Is this a startup cost or not? Let me know and I can address those. So the rules. The blanket rule, you guys, is that you amortize, and I'll tell you what that means in a minute. You amortize the total startup cost over a 15-year life. So what that's saying, from the time I decide, okay, I'm going to make a business, I'm going to go visit my accountant, get a lawyer to set it up, I have to register, I'm going to start some advertising, get some employees trained, all the things we just talked about. I decide on June 1st that I want to get this business going. I start spending money to get it going, and I launch my business on November 1st. And let's say in that time I spend $10,000. $10,000 on all the things. So what the IRS says is that I have to amortize that $10,000 over 15 years. What that means is it's like depreciation. If you've been in here when we talk about depreciation, it means you take a little bit of the expense each year over 15 years. So again, if we're using $10,000, that's our startup costs. 1, 2, 3 divided by 15 years. We're taking only $667 of expense every year. Doesn't seem like a lot, but that's what they say. However, the IRS allows you to deduct up to $5,000 in the first year you're in business. So what they're saying there, so if your startup costs are $5,000 or less, you can actually just expense them all in the first year. You don't have to worry about amortizing. If your startup costs are more than $5,000, like in our $10,000 example, what the IRS is saying is go ahead and expense $5,000 of that. And then the remaining $5,000, then you're going to have to amortize it over the next 15 years. All right, so you can take $5,000 this year as an expense, and then that other $5,000 you're going to amortize over 15 years. That's going to be $333 a year you're going to expense. If your business stops being in business before that 15 years, then you'll get to take the rest of that expense, whatever's still outstanding, the year you close. Because 15 years is a long time, right? So much can happen in 15 years. You might transition your business. You might start another wing of a business, and this one might go, who knows? The money is never down the drain. It's all just a timing issue or timing difference. All right. So up to $5,000 you can deduct in the year it's taken, and you don't have to. If you want to amortize, you're more than welcome to. But they're saying you're allowed to take that $5,000 in year one if you want. The rest of it, we amortize over 15 years. And then if our business closes before 15 years, we get to take whatever we haven't expensed yet on the last year. So we talked about what is covered under startup costs, and we talked about how to handle your startup costs. And then I just have a few little extra tips here to make sure you guys keep in mind. If you've been around me for a while, you're going to know what all 3 things I'm about to tell you. If you're new, or maybe you haven't caught a lot of these, then there's some bonus tips. The first thing you guys need to do, the first thing I suggest, is you use some sort of tracking, okay? Even if it's as simple as a spreadsheet, okay? But track your expenses, even if it's a spreadsheet. I recommend software. I always recommend software because it will grow with you. You don't have to worry about, maybe 6 months down the road, a year down the road, you've been using your spreadsheet and you've outgrown it and now you've gotten behind and now you have to move it into QuickBooks Online or whatever software you use. If you start with a software from the beginning, you can grow with it. And another reason I think that's beneficial is you can learn it all when you have less activity going on, right? And as your business grows and it gets more complicated, you're not trying to dive in and learn from square one. There are some really reasonable products out there, you guys. And we actually partner. We're a CBG partner, which is Complete Business Group Solutions. And we are able to get you the lowest price possible. So if you do need a QuickBooks product, reach out to me. Even if you're not a client, let us help you. Because we're in the business of giving you guys the tools that you need to succeed. So let us get you into the QuickBooks product you need, all right, for the least, cost possible. And then you have that tool at your disposal. You can use it and then you're there. You're where you need to go. Second tip I have for you is to open a separate bank account. Okay. So many of y'all, especially with you small sole proprietors, those of you that are earlier in your business are just using your personal account, your personal funds for your business. Please stop. All right. Separate, open a business account. Even if you're not open for business yet, right? Go open a business account so that you can start tracking those expenses. All right. And the nice thing about that, you guys, if you have a separate business account, if you get behind on your software or your Excel spreadsheet, you don't have to go back through dozens and hundreds of expenses looking for your business expenses, right? They're all in one place and that's all that's there, right? So a separate bank account is a must. And then my third tip is to get a professional on your team. I mentioned this at the beginning. It can be a bookkeeper, it can be a tax accountant, but some sort of accounting professional to help you direct you in the right direction. To help push you in the right direction. This doesn't have to be somebody, it doesn't have to be a full-time employee. It doesn't have to be someone that you work with every single month, okay? It might be somebody that you consult every quarter, that you just say, you might have so little activity that they're able to just bust out your bookkeeping in an hour every quarter and get you the information that you need. But I want you, as soon as you can afford it, to have another set of eyes on your books, someone else taking care of the books and you as the owner being the second set of eyes. All right. So I'm going to say that again. I want you to have somebody. It doesn't have to be, it can be someone on your team. It can be a bookkeeper, an outside contractor, somebody that's doing your books. Even if it's, like I said, even if it's on a quarterly basis, especially at the beginning, because money is tight, I understand, and you're watching every penny, but they're doing the books and then you're just being the second set of eyes on your books. Because when you're doing your own books, it's really hard to get lost in the minute details. But as a business owner, you want to be looking at it from a high level, from a big picture. All right. So someone doing the day-to-day in your books and then you looking at being able to use it as a tool, because that's the thing, you guys, your financial statements are a tool. They're a tool to run and grow your business. But if you are consumed in the day-to-day of them, you lots of times lose that big picture. Also, if you are responsible for the day-to-day, you procrastinate, you don't do it. I don't do my own books. I'm an accountant and I don't do my own books because I get lost. I have a teammate who does them. So just a few extra tips, not really have startup cost wise, but if you're starting a business, those are some things that I suggest you look into. I don't see any further questions in the comments, so I think we're good. If you're watching this on replay, make sure you tag me if you have a question or a comment. And then for those of you that maybe came in late, I just did want to mention to you guys a few exciting things coming up. We are in the middle of a rebrand and you guys will get to see that next month. Really excited about that. We are launching, I'm running a workshop in a couple weeks. Again, this probably isn't for a lot of you in here but it is for self-preparing your tax returns. It's a DIY tax prep workshop. So it's me helping you guys to avoid an audit and put more money in your pocket. So if you do self-prepare your tax return, something to look out for, then for you guys, I have a big announcement in a couple of weeks. It's something for y'all. So yeah. So a couple really big things in the works, excited for you. But until then, keep showing up. I will be here Mondays, Wednesdays, and Fridays. For those of you that might be new or not know, Mondays are our financial focus. Today was part 3 of our new business series. Next week, it's a 6-part series. So that's what we'll be doing the next couple of Mondays. Wednesday, we have a bit like an event, like a more business focus. So not so much on the financials. So the last 2 weeks, we've talked about working or running your team remotely and running your business remotely. This week, you guys do not want to miss this week's. Wednesday, 2:00 Mountain Time, we're talking about selling. And we're talking about selling in this environment. And where it's very sensitive and we feel like we should just be giving everything away, but we still have a business to run. And so that's what we're talking about on Wednesday. And it is going to be, guys, it's going to be freaking fire. I gave a lot of this the training I'm going to give you guys, I gave to a team of like 2,000 people a few weeks ago, and it went over smashingly. I gave this to 2,000 salespeople, you guys. Like weird. I'm teaching salespeople, but it was fun. I'm really excited to share it with you guys because you guys are my people, and that'll be Wednesday. And then Friday will be our normal updates and Q&A. And as always, keep an eye on this page because if there's anything that comes out throughout the week, I will update you guys with posts. Otherwise, I really hope to see you guys on Wednesday for our for our training, for our event on selling. Have a good one, you guys. Happy Monday and have a great Monday and have a great week.